Hello nieces, hello nephews, it's your Uncle Charles here, and today the S&P 500 decided to give us some choppy price action, alright, which is not very surprising after we had such a green week from last week, especially towards the end with Thursday and Friday and stuff. Okay, we're going to talk about it, but first, here is the flow sentiment. I have a filter for 500k premiums or above. Pretty overall bearish, 82% in the puts, okay? Something that sticks out to me. Still seeing a lot of puts coming in for that July 15 expiration date with 395 strike. A lot of big money, a lot of millions and millions of dollars going into that strike price on that expiration date. But I did notice this. This came around noontime. 49.3 million in premium. It was a block order. 400 strike price. But the expiration date is December 16, 2022. So with option flow, I'm using cheddar flow, but with option flow, we can see what the orders are, but hard to say what the intentions behind them are. Okay, is this a hedge? Is this a big bet? Do they really believe we're going to drop again? All right, we'll see, and we'll let the price action guide us. Okay, so going into the intraday update, all right, this is my plan for on my Discord, okay, where I give the group my commentary, my analysis, my notes, my trade ideas, stuff like that, okay? And I had a bull case and a bear case scenario, like I always do. Pretty much for the bull case, I was looking for calls. If the first resistance clears, right here. This means to look for calls if the first resistance clears and play it level to level. And the first resistance being 413.5, because at the time of writing this, SPY was at 412.59, okay? And my bear case was simply with 410 being a critical support because it was at 412.59 when I wrote this. So I was looking at 410 as a critical support. And I mentioned if that level was lost, I would look for puts and play it to the downside. Okay, now there was a support level around 412. All right, now this was not mentioned in the group, was not one of my alerts, but you know, I saw an opportunity and I just pretty much took it. All right. SPY opened up with a drop to the 412. And it broke it. That's my white line here right there. That's a 412 level. Now, I wouldn't consider this a good trade. Why? Because I didn't follow my strategy properly. Okay, I'm glad it worked out for me. I entered a put on the breakdown and played it down to the next level around 410-ish, level to level. All right, but my plan was, and usually my plan is to try to catch the second leg and not actually the first leg, okay? So usually, and it's also what I recommend to my group, to look for puts if 410 is lost, okay? So what I did was I played a put 412 down to 410, level to level, left a small runner, got stopped out when 412 was recaptured, okay? But I did mention the group, and as I wrote in Discord, look for calls if we could take out that 413.5 level. SPY does that, which it did, all right? Some of my members actually entered calls on the recapture of 412 to play the false breakdown, okay? So they didn't even need me to tell them to do that, but they did, which is really great because they're learning the concepts. But that's where I entered. I waited for the 413.5 to break out, played it up to 415, took most of my profits there, level to level, and then I left a small runner, which is about 10% of my original position. Above 415, I had 416.5 level. Above that, it got to 416.45, so 5 cents short of my price target. All right, and then when it started dropping back down, that's when I took profits on my small runner. The reason was I was watching that 415.5 level because it was acting as tough resistance all morning, and once I saw that we had a false breakout of that level, I was like, you know what, screw it. I'm gonna take the rest of my profits. Pretty much done for the day. Okay, so yeah, and then SPY just lost to 413.5, dropped down to 412, bounced back up to 415, dropped back down to 412. You know, choppy price action, going up, going down. We didn't get a nice clean trend move, which is why playing level to level was so important, which means when you enter from one resistant level, it's very important not to try to chase home run and just take profits on the next level. You know what I mean? And then leave a small runner. You can still make some good money. And those base hits, you know, in my opinion, they add up. Okay, but the reason why I recommend playing it like that is because it's just safer. Because in real-time trading, I mean, we can say we did this or we should have did this all day. But in real-time trading, you just don't know what the market is going to do. Last Friday we had some clean trend moves where we can just let it buy one contract or something, or whether it was a call or put, and just let it ride all day. In situations like this, when the market is choppy or intraday market is choppy, it's hard to just let it ride because it's gonna go up, down. So I'd rather just take profits and leave a small runner. All right, and I can always reposition myself. You know what I mean? But my thing is, I try to trade as little as possible so I don't have to deal with as much stress. Just make a decent amount of profit and just enjoy the rest of the day, okay? Because health is also wealth, all right? So that's my intraday analysis, part of my Discord, what I do, all right? And that's the trades I took, okay? But here is the daily chart of SPY, all right? So I talked about this multi-year trend line many times. I talked about this yellow bull flag that I have here, and also this falling wedge that we broke out of. Okay, you can see here SPY recaptured that multi-year trend line. Mentioned this many times, right? Break out of this falling wedge, the green falling wedge. The main pattern that I'm watching right now is this bull flag. Okay, I had somebody tell me that's not a bull flag. I think it's a bull flag. All right, that's the main pattern I'm watching right now. The big question is, can SPY, the SPY, fill the rest of this bull flag? All right, which could possibly take it up to 441.9-ish. Okay, now I do have my Fibonacci level, all right, starting from January 2022 high to May 20th 2022 low. All right, also an area of confluence at that 418.4-ish level. That's the 38.2 retracement level of this fib level, all right? But keep in mind, I also have fib levels starting from the March 2020 low to the January 2022 high. And that 418.4 level is also the 23.6 retracement level. So that's an area of confluence and a very extremely critical level to watch. Because when you got two reasons based on technical analysis telling you this level should be a level you should watch, that's pretty important, okay? And that's just based on two different Fibonacci levels that I'm using, all right? Let me check the 50-day. All right, 50 days up there, around 425.9-ish. We could test that 50-day moving average if we clear 418.4-ish, all right? Okay, I use moving averages as well. I don't talk about them that often because I usually base my support levels and resistance levels based on previous demand and supply zones, patterns, based on falling wedges and bull flags, and of course fib levels. Okay, but I use a moving average occasionally. Okay, so pretty much today, pretty choppy day. You look at this strong green week we had here. This is a daily chart, but you can see all these green days. We bounced all the way from 380 to 381 zone all the way up here in a short matter of time. So some basing would be healthy, and I think we could get some more basing coming the rest of this week. Not the rest of this week, maybe the next day or two. Some basing, and as long as it's basing, all right, meaning it picks a range and just it plays ping pong between the range, okay? Possibly right now it could be around 415-ish down to the 410 level, or maybe 412, because that's what it was looking like today, all right? But as long as it's basing, that does favor the upside. I'm still going to play it level to level because I am a day trader, intraday. But the big level that I'll be watching for on the daily chart, especially if you're a swing trader, that 410 level. If that 410 level fails, that'll be a good time to enter puts. And if you're thinking of swinging, that'll be failure of that level. I would feel comfortable swinging puts. Okay, I'm not going to do it, but I'm saying if I did do it, that's where I would feel comfortable. Because I favor a nice drop down to a 403 to 404 zone. That's the, based on my blue Fibonacci level, that's the 23.6 retracement level. And if that level fails, we can go back down and test 397, 398 zone, okay, which is the multi-year trend line, all right? And like I said about that 418.4 level, I think if we clear that, that's an area of confluence, very tough level. If we do clear it, and that is a big if, because there's a chance we could just pull back, okay? We are still technically in a downtrend. But if we do clear it, that's a big, massive win for the bulls, okay? And it could possibly send us back up and test that 50-day moving average, which is around 425 to 426 zone, okay? Remember, the 418.4 level must clear for the 50-day moving average to be considered a target. At least that's my opinion. That's how I would trade, okay? And yeah. But anyways, between that big level of 418.4 to 410, we do have 416.5, 415. Those are the current resistance level, plus 413.5. And then below it would be 412 and 410. Okay, those are the pivot points, the support and resistance levels. Okay, guys, please write it down. All right, so like I always say, let the price action guide you. When a resistance clears, look for calls, or you can use the back test and go strategy. Check the description below where I explain the back test and go strategy. Very important concepts to learn. All right. Anyways, and if a support fails, that is the best time to look for puts and bet to the downside. Okay. Now, that's a daily chart. I do want to talk about the 2007 to 2009 bear trend, bear market at the time. Okay. Now, I talked about it in my last video a little bit because I was using it as a reference to how bear market rallies or relief rallies, they can last sometimes anywhere from a couple weeks to a month. Even though the overall downtrend is bearish, you can see here that there's times where it rallies, it can last for quite some time. So right now, that is what the SPY is doing. It's rallying. I wanted to point this out because I don't want us to get too bullish just yet, because we have some updates. We still want to be vigilant. We still want to be nimble because anything could happen. Okay, now I'm bringing this back up again because this time I'm showing this chart with the Fibonacci levels. Okay, so starting from the October 2007 highs down to the March 2009 lows. Okay, now one thing I want you to notice is how do we know when the bottom is in? Well, we don't know when the bottom is in, especially when you're trading in real time. But we can look for signs based on past data. Okay, you can see here in this data, SPY had to clear the 23.6 retracement level. It never lost. Once it cleared it and back tested as a support, it never lost it again. You understand what I'm saying? That 23.6 retracement level was very critical. Clearing that level is the first sign that a bottom is in. Okay, that's the 2008 bear market. Okay, if we look at the COVID crash, all right, if we look at the COVID crash, this is the COVID crash. I'll start my fib from February high down to the March 2020 low, right? And what you can see here, what happened? When we had a bottom, it cleared that 23.6 retracement level. Never lost it. If we lose the 23.6 retracement level, then I would have favored more downside. But look at here, it didn't. We never lost it. So like the 2008 crash, 2020 crash, that 23.6 retracement level must clear first. Let's look at another one. Look at this, the September 2020 to the October 2020 correction, all right? Use some Fibonacci. You start here, the high there down to the low. Okay, so we're starting from the high, the September 2020 high, down to the late September 2020 low. And look here, it had to clear the 23.6 retracement level before heading up higher. Okay, and that was a big move. Down from 329 all the way up to 354ish. Okay, now we went back down, but look, we had a breakdown on this candle, October 28 candle, below the 23.6 retracement level. Recaptured it on the next candle, broke down again on the next candle, recaptured it again. Okay, before heading up higher. So the 23.6 retracement level is the sign that we need to watch out for if we are expecting any more downside or expecting any more upside. If it holds, expect more upside, which we got. And the best time to turn bearish and catch a nice leg down, I'm talking for swing trading purposes, if we lose that 23.6 retracement level. Now we look at our current chart here. Okay, like I said, I have the fib from the January 2022 high to the May 2022 low. And here, let me move these candles. Okay, you can see here the blue line right here. It was at 43.96. That's the 23.6 retracement level. we cleared it on May 26th, okay? So with that being said, if history was to repeat itself, if you're a bear, you want to see 43.96 fail. Okay, we still got to get through 412 and 410, but if we get to this level, you want to see that level fail because it's a sign that we're going to get more downside. All right? If you're a bull, that level, you want to see that level hold on at all costs on at any basing or pullback, back test, whatever title you want to use it. If it gets tested again, it's a must hold for bulls. As long as that level holds, there is a chance we can go fill up the rest of this bull flag. All right, guys? But at the end of the day, you got to play it level to level as unbiasedly as you can, okay? Now, moving on to the VIX. VIX had a breakdown of this triangle pattern last week. This week, it closed back within. So, technically speaking, that is a false breakdown. However, look how red that candle is, and it's a decent-sized body, okay? So, it's not the most bullish false breakdown I ever seen. I just want to be unbiased about it and call it what it is. Okay, so obviously, for me to be bullish on the VIX, I need to see it clear 27.57. It tried to do that today, but it couldn't hold. All right, and to be bearish, it needs to drop back below 26, take out that 25.44 support level, and then we could see more downside down to 22.39, maybe down to 18.50. Okay, but a bullish VIX is usually a bearish SPY, and a bearish VIX is usually a bullish SPY. All right. So keep that in mind, all right? Triple Q here. It tested. I had a level around 309.9-ish. You can say 310. We rounded up to 310. It closed it went above it a little bit intraday around 311.33, but could not hold above. So what I need to see to be bullish is that 310 level cleared, meaning a close above, possibly a back test of support to confirm to push more up to outside to put 315 in play. Okay, that's my next target for the Triple Q. All right. Failure to do so, my next support is around, let me see, let me use the, okay, so I do have support. This is a previous high, around 306 to 307 zone, previous high from May 17th. Okay, so now this is the previous supply zone. We cleared it. We want to see it get tested as a demand zone, okay, which it did technically today, and it held. All right, so obviously below 306, I'll be bearish. 301.6 back in play, then lower levels, okay, 295, 296s, all right. But as long as 307 to 306 zone holds, that keeps 310 in play as the next resistance. It needs to clear that to put 315 in play, okay. Those are the levels for Triple Q. Dow Jones, it break above that 330.46 level last week, all right, and it closed today around 330.2. So technically speaking, that is a false breakout. However, it does not look that bearish, okay? It's looking like it's just chopping, so it could be basing around that level, building strength for more upside. Like I said, since last week and the week before, this is a big move to the upside. So Dow Jones probably needs some time to breathe and cool down a bit so it can build strength for more upside. IWM, say it looked like a back test type of day. It cleared 185.5 last week. Back tested that level as support today. It did close a little below it, not too bad. So IWM to be bulls needs to get back above that level and go test that 190.5 level. All right, if that fails, that keeps or puts 182.9-ish support in play. And if that fails, that's a false breakup of this yellow trend line again, and we could possibly see more downside, 179.2-ish down to 174.3-ish, and possibly 169 or lower. All right. Apple's looking pretty decent. It cleared and recaptured that 146.6 level last week. Still managed to hold it. Almost tested as support, just a few cents shy. There is a critical resistance at 150.65 based on my fib levels. All right. So watch for the breakout. If it break out, that's bullish. Okay. And it puts 153.8-ish in play. A test of this blue down trend line. And obviously a break above will be a breakout. Very bullish. 156 to 161.7 in play. Okay, I'll look for puts if that 146.6 support level fails. Again, put it 143.79, 141.6, and possibly a lower low. All right, a lower low. Excuse me. All right, there is some support around 137.5, and then the previous low around 132.7. But as I said, possibly a lower low, which could possibly break that down. Okay, but we shall see. Tesla's also looking good to me. Cleared that 745.49 level last week. Today treated that level as a support. All right, we did have a wash below. Tesla is a very volatile stock. Okay, but it did have a wash below down to 734. Okay, but eventually bounced and recaptured that level. Okay, it did get a little above. I had a resistance level around 765.7. It did get a little above that, but couldn't stay above. So for me to be bullish, really needs to clear that level to put 822 in play. But first, there is some resistance around 788. Okay, guys. So that's what I got for Tesla. All right, needs to clear 765.76 to put 788, then 822 in play. All right, 745.49 fails. That's bearish, very bearish, and put 701 back in play. All right, guys. So that's what I have for you guys today. I hope you guys found some value in this video. Thank you guys so much for watching. This really means a lot. And I'll talk to you all soon.